Today I'm breaking down the 4 levels of credit cards from beginner to baller so you can know which cards to apply for and when. Family, you gotta stop applying for these credit cards without a plan. That's how you end up with denials, hard inquiries, and a lot of cards that really don't account for much in the grand scheme of things when it comes to your financial future. This is the game plan that you need to keep your credit profile looking right so you can get approved, get those higher limits, and get access to funding like you never had before. Let's get into it. Peace, family. Your boy Treetop Chris checking in, and welcome back to Treetop Finance, where we talk about everything finance, as well as wealth building strategies and credit funding. Let's start at the top of the food chain, and this is what we're going to call Tier 1. These are the big banks, your Wells Fargo, Bank of America, Chase. Now, why do these matter? Because these banks are the gatekeepers. They offer high credit limits and the best rewards, and if you build a relationship with them, access to business credit and funding. But here's the catch, right? With these Tier 1 banks, they're super duper picky, right? They don't like to take risks. If your credit profile is shaky, high utilization, recent late payments, or too many new accounts, you're probably gonna get denied. You're probably gonna get smoked. You ain't even gonna get an account. You feel me? So what you need for Tier 1 approvals, you need 700 credit score, low utilization. Well, really it could be like 720 plus. I would suggest 720 plus. But low utilization, we talking about sub 20%. If you one of my clients, I'm gonna tell you sub 10%. No recent late payments. Strong credit history, that means at least 2 to 3 years, no missed payments. You really want to have a good 5 years. You can try to slide in there with 2 to 3 good years of credit, but I would suggest at least 5 years. For you new incomers, if you got 3 years of good credit and you haven't opened up a bunch of new accounts, you might be able to slide in there with these Tier 1 big dogs, but not too many new accounts, right? The reason why these new accounts really make a difference is in regards to certain banks like Chase. Chase has the 5 and 24 rule. Some of you who are in the business or in the realm of finance understand and know the Chase 5 and 24 rule. The Chase 5 and 24 rule basically states that you can't have more than 5 new inquiries or 5 new bank accounts with credit on them in the last 24 months. That's the last 2 years. So if you're aiming for the Chase Sapphire card, Amex Platinum, or any other premium card, just make sure your profile is clean. Now, if you're not ready for the big leagues, no problem. This is where regional banks and credit unions come into play. These banks want to see that you're a good customer. Do that and they'll offer you pre-approvals, better credit limits, and business funding opportunities. I know y'all love those business funding strategies. For example, this your TD Bank, your KeyBank, your PenFed, your Navy Federal Credit Union. I know a lot of you heard of some of those banks already. These banks actually want to lend to you, but they're more focused on the relationship you build with them than your credit score. Some of them want to have both, but mainly it's that relationship that you build with them. But what's the best part about working with these regional and credit unions? They give you high limits, low interest rates, and they're more lenient on the approvals. Now, if you want to rock with the Tier 2 banks, it's a little bit of a grind, but I wouldn't necessarily call it a grind if your whole purpose is to build with them. Once you set up your checking account and your savings account, you want to make a small deposit into the savings. It could be like $50 or $100. If you have direct deposit, you want to do direct deposit. Use their services. Try to do like auto loans and personal loans. We talk about the Navy Federal Pledge Loan hack. If you want more information on that, just drop a comment in the comment box. We can do a quick video on that, but I've already talked about it in other videos in short form on Instagram, TikTok, etc. But what you want to mainly do is show loyalty. You want to try to run your transactions through that bank. If you have some money to put in there every week or every 2 weeks, you do that with these regional and these credit unions because they love to see the type of relationship that you can build over time before they lend to you products. Don't just go into the bank and say, hey man, I need a credit card. Unless your credit is A1. We talked about how it was going to be A1, but remember, you can use the big banks for that. The credit unions will give you a higher limit out the gate, but remember, we're building a relationship with them because once you start getting money with them, it's going to go way further than you can even imagine. Trust me when I tell you, it's going to be worth it. This is one of the biggest credit hacks out there. These credit unions and these regional banks, they get those large limits because people sleep on credit unions, and if they're not sleeping on them, they overuse them and they're not paying them back. But the relationship is important, so you want to keep the plug, y'all. Y'all want to keep rocking with them as much as you can because they're going to keep giving you the bag. Check out the credit unions specifically because if you're not, you're leaving money on the table when it comes to getting funding. All right, now let's talk about Tier 3 cars. These are what you would call hybrid cars. These are half store cards, half bank cards. Examples of hybrid cards would be like Amazon Prime Visa cards, which is actually a Chase card, Apple cards, which is actually a card that is issued by Goldman Sachs, and a PayPal MasterCard, which is issued by Synchrony Bank. These cards help you build credit and come with decent rewards, but they're easier to get than Tier 1 cards from those big dogs. Here's 3 reasons why these cards are great. They give you easy approvals, but you don't need a perfect credit score. They give you higher limits than store cards, and they could be a stepping stone to Tier 1 cards. There is a downside to these cards though. Some of these cards have lower limits. A lot of the other institutions out there might not see them as reputable cards. Like Synchrony Bank is not going to be recognized by Chase or Bank of America as a legitimate card, even though they are a legitimate bank. But if you're looking to build credit fast, it's a great stepping stone to help you build your credit profile. Now let's talk about the easiest cards to get, your store cards. Examples of Tier 4 store cards would be your community bank cards, your Victoria's Secret cards, your Overstock cards, your Wayfair cards. It could be like a Macy's card, a Best Buy card, a Home Depot card, store cards. These cards are super easy to get, but they come with a catch. They often come with lower credit limits to start out. You can only use them at that store. They don't carry as much weight when you're trying to build your credit profile. Should I get these store cards? Only as a last resort, really. You get these cards if you're brand new to credit, or if you need like a quick boost to your credit score, or you shop at that store a lot. And I mean a lot. But if the goal is to not stay here, like only have these store cards, use them as a credit building tool, then graduate to better cards later. So here's the game plan. If you're just starting out, you can go with the Tier 4 cards. Remember, Tier 4 cards are store cards, or you can use a secured card from any of those banks that I talked about before, or you can call your local credit union or regional bank and see if they offer secured credit card. Now we talked about secured credit cards before. That's where you put down a certain amount of money and your credit limit becomes the money that you have put down, because they use that amount as collateral just in case you decide to run off on the plug, i.e. not pay them back. They already have your money because they're taking a risk on you in the beginning because you don't have a good credit profile. Now, if you got decent credit, you can apply for those Tier 3 hybrid cards and build credit history that way. But if you want higher credit limits and better perks, build a relationship with those Tier 2 banks, those credit unions and regional banks. Those are my favorite. I love regional and credit unions. I swear by them. Most of my credit accounts are with credit unions. And if you want me to talk about more credit unions, just drop a comment. Let me know, say, hey Chris, give us some more information on those credit unions that you love to work with. But if you're ready for the top, the big dogs, you already got a credit history built, remember, you need to optimize your profile before going after those Tier 1 banks if you don't have it optimized already. If you have high credit limits and you have good credit history and you have low utilization, you know that you can go for those Tier 1 banks. The key to the strategy is to stop applying randomly, y'all. Build your credit step by step, family. That's what we do here at Treetop Finance. Drop a comment if you want a breakdown of which cards you would qualify for. If you want to ask me personally, you can set up a 30-minute free call with me to talk about your credit qualifications and we can get it knocked out for free. One time though, y'all, because I know y'all be blowing me up. 30-minute, one time. Chris, here's my credit report. Can you tell me what I qualify for? And we can figure it out right then and there if I have time. But the point is to level up their credit game so you understand the different tiers after watching this video. Your boy Treetop Chris checking in. Peace and love.